My name is Dania Zinurova and I'm Portfolio Manager of WAM Alternative Assets. Today I'm excited to have Darren McKenna with us, who is the partner at Crescent Capital Partners. Crescent Capital Partners is one of WAM Alternative Assets investment partners with whom we invest in private equity across sectors, with a particular focus on healthcare sector. And I would like Darren to take this opportunity today to give us an introduction to Crescent Capital activities within that sector and also share his knowledge on the market and what's been happening over the last 12 months in this sector in Australia. Thank you, Darren.
No problem.
Thank you for coming and taking the time. I was thinking, from our shareholders' perspective, it is such a fascinating place, private equity, and there are so many different strategies that you can pursue. Crescent Capital is focusing predominantly on the mid-market growth, mid-market buyout. Can you please give us a good explanation? What does it actually mean when we say private equity buyout?
Sure. Fairly simple approach, which is we're looking for private companies. So if you think about, we're a thematic investor first, right? We're thinking about big themes and we look for companies that are well positioned within that theme, that potentially we could unlock a strategy that could accelerate growth. So we're looking for businesses, private companies often, or to do buyouts from public companies or large conglomerates where we can take a part of that business or the whole business, bring it out, take it private, and then grow that business by executing that strategy in a private setting. Ultimately, what we're doing is we're trying to create a better business. So we're taking a business from whatever it is, and often they're still strong businesses, but applying our expertise in the space, both investing, strategy, operational expertise, to accelerate the opportunities in those businesses to take advantage of that theme. Because we tend to have a more impatient time frame than private companies on their own, and we'll accelerate that growth and that opportunity over our investment hold.
And perhaps few examples that can illustrate it. So I thought about one of the larger transactions that happened last year, healthcare Australia, and you've been investor in that business for a long time. It would be good if you can tell us a bit more about this business. What was your value add throughout the time in this business and your conviction why you still remain the investor in HCA?
Sure. So if I probably go back to the original thesis of HCA when we first saw it, that probably illustrates it best, is it comes back to this issue, this fundamental thematic within healthcare of there's a supply and demand imbalance, right? So the most scarce resource in healthcare is healthcare professionals. And what Healthcare Australia was when we first acquired it was predominantly a nursing agency. So we saw an opportunity to take that business and grow it into something more, because we saw this imbalance between the two and saw an opportunity to execute that strategy across into different sectors of the healthcare sector outside of just nursing. The thematic was, or the strategy was, the scarce resource is the healthcare professional. If we are the biggest employer and one of the biggest employers of healthcare professionals in the space, if we can take those healthcare professionals, we can move them to wherever the demand is at any point in time. So, in fact, the COVID pandemic was a very good example of executing that strategy, where it was devastating to our traditional markets. So acute care completely dried up altogether, aged care was in complete turmoil. So we had to take that workforce and move it to where the demand was. And the demand at the time was around things like vaccination programs, hotel quarantine, and various other real rescue type situations for both acute care and aged care providers, where we were able to stand up whole workforces and move them into situations.
And it is now the largest supplier of medical staff.
And it does both. And we felt that if you provide that contingent labour and you've got access to that labour, you can move into some direct care areas as well. So the business has grown into aged care in the home, it's moved into disability care, It's moved into allied care, into aged care and acute care settings.
Yeah.
So it's taken that strength and then moved into new sectors, and that's
Yeah.
what's really driving the growth.
And I would say the revenues in this business would have pretty strong link to inflation as well.
Yeah, it's very inflationary protective because essentially the base model of the core business is you're effectively charging on top of salaries, right?
Yes.
So if salaries are increasing, your costs, your price increases as
Yeah.
well. So you have good control over price. Still competitive, but you have control over your price. And therefore, inflation isn't necessarily a bad thing for this business.
Yeah.
In fact, arguably, it could be a good thing in some cases. Yeah.
Thank you. Well, I'll tell my kids to, the future is medical profession.
That's it, definitely.
Job guaranteed.
Yeah, definitely.
And in terms of the more recent deal, I
Mhm.
found it really interesting, and the way you presented it when it was just an opportunity, Pinnacle Rehab.
Yeah.
I would love you to tell our shareholders about this deal as well.
Yeah, so Pinnacle Rehab is at the core a return to work rehab provider. So what it does is it manages cases on behalf of insurers, and the one big insurer in New South Wales, iCare, through its partners, its CSPs, insurance companies. And what it does is it just basically manages the medical care required to get a worker back to function and then back to work ultimately. What we saw in that business, because that's a business that's been around for a long time, it's been a sector that's been around for a long time, nothing special about that, but what we saw was there was a change in the regulation in the return to work and workers' compensation space that we didn't think anyone else was, they would have been aware of it, maybe didn't pick up the opportunity, where there was a change in the way the market was going to operate. Because Pinnacle was always a quality provider of this care and had very high quality outcomes, but didn't really get its share of the market because it used to be a share it equally amongst. There was no incentive to go to the quality providers by the sector, but that had changed. So back about 6 months before we acquired the business, it had changed. We saw that opportunity. We saw it as a chance to actually grow this business and accelerate its growth and exploit that strength it had, and so far we're 6 months into that deal now. But so far the business is growing tremendously, right? And we're seeing that thesis play out very well.
Yeah, and I think there is so much focus now on employees' well-being in the corporate world. So it's a very important part of the whole package that the firms can provide as well.
And in particular, that one big part of that business is mental health as well. So we've always liked the mental health space as an opportunity, and this business has a big role to play in that from an occupational health perspective, and we saw it as a scale opportunity to be in that, because there's very few opportunities outside of acute hospitals to get involved in the mental health space in Australia, and we saw it as an opportunity to get into that as well, and that's very strong growth option and pathway for them going forward.
Great.
Yeah.
Thank you very much,
No
Darren.
problem.
It was a pleasure
Yes.
to have this conversation with you.
Nice to be here. Thank you.